By the end of this video, you will have the exact swing trading checklist, 4 conditions that must all be true before you enter, with a minimum 5 to 1 reward to risk, so 1 winner covers 4 losers. Most videos on swing trading setup give you theory. This one gives you the exact if-then rules so you can execute from this today, entry, stop, and target included. Swing traders who require a minimum 2 to 1 reward to risk ratio and only trade in the direction of the daily trend need only a 40% win rate to be profitable long-term, a much lower bar than most traders realize. Here is what this looks like on a real chart right now. Look at today's live chart. I am going to show you exactly what a valid swing setup looks like on real price action before I walk you through the checklist. Here is the problem costing most swing traders looking for high probability pullback entries real money. Day traders have a built-in disadvantage. Every hour in front of a screen increases exposure to emotional decision-making. Swing traders remove that disadvantage entirely. They analyze charts once in the evening, place conditional orders, and let the market do the work. The problem most beginning swing traders have is choosing the wrong entry. They buy breakouts that have already moved instead of waiting for the pullback that loads the trade with favorable risk to reward from the start. Here is the exact framework. 3 rules any chart, starting today. Step 1. If the daily 21 EMA is rising and price is above it, only take long swings. If the 21 EMA is falling and price is below it, only short or stay out. Never swing against the daily trend. Step 2. If price pulls back to the 21 EMA, the 50 SMA, or a prior breakout level turn support, the setup is loading. Mark it and wait for confirmation. Step 3. If 2 to 4 candles compress at that level with volume drying up, especially an inside bar, the spring is coiled. That consolidation is your entry trigger. Step 4. If price breaks above the consolidation high, enter. Stop below the consolidation low. Target is the prior swing high. If the reward to risk is less than 2 to 1, skip the trade entirely. Screenshot those rules right now. Those are your exact conditions before you touch any trade. Here are the exact rules. Write these down. Rule 1. Identify the daily trend first. Only swing trade in the direction of the daily chart. Rule 2. Wait for a pullback to a key level, 21 EMA, 50 SMA, or prior support. Rule 3. Enter when a reversal candle forms at that level with the stop below the candle low. Rule 4. Target is the prior swing high for longs, prior swing low for shorts. Minimum 2 to 1 reward to risk. When a stock in a strong trend pulls back to the 21 EMA, you are entering at the same level where institutional buyers are accumulating. Large funds cannot buy their entire position in a single session without moving the price. They need the pullback to get their orders filled at acceptable prices. When you enter the consolidation breakout at the 21 EMA, you are literally entering alongside the same institutional buyers who will be driving the next leg higher. Coming up, I will show you a live swing setup on today's most active name, daily chart, entry level, stop, and target, all labeled. Here is what the tape looks like right now. RKLB is down 7.6% today, the biggest mover on the tape. Check this name on the daily chart. Is it in a clear uptrend? Has it pulled back to a key level? If yes, this could be a live swing setup. All it needs is a reversal candle confirmation. I am using today's live chart to show you exactly where these levels appear right now. The annotations are mapped to real price structure so you can see this in a live market, not just theory. Apple was in a strong uptrend after breaking out above 180. It pulled back over 5 sessions to the 21 EMA at 184, forming a tight inside bar consolidation. Volume dried up to less than half the 20-day average during the consolidation. The breakout above the inside bar high at 187 triggered the entry. Stop was set at 181.50, below the consolidation low. Risk was 5.50 per share. Apple ran to 199 over the next 4 weeks, 12 points gained on 5.50 at risk. Here is your complete checklist before you take any trade using this setup. Daily trend direction is confirmed. Price has pulled back to a key level. A reversal candle has formed at that level. Reward to risk is at least 2 to 1. Stop is below the reversal candle low. Screenshot that. Before I give you the key takeaway, do you prefer swing trading or day trading? Tell me in the comments why you made that choice. Here is your key takeaway. Write this down. Do not buy the breakout. Buy the pullback to the trend. The entry in a trend is at the retest, not the initial break. Tonight, scan for 3 stocks in strong weekly uptrends that have pulled back to their 21 EMA. Set price alerts for each. Watch them over the next week. We share our weekly swing trade watch list every Sunday evening in Discord with exact entry levels and stops. Link in the description. If you want the daily watch list delivered to you every morning, join us at patreon.com/c/ChartNavigators. Link is in the description. If this gave you one concrete edge today, hit like. It helps other traders find this. The full Chart Navigators series is in the description. Every video builds on the last. Watch them in order and you will have a complete trading framework in under 2 hours. Trade smart. Trade disciplined.